taxation. Really excited about this topic today. Our Meet Avalara topic is going to be all around, let's address today's taxation, the impact of South Dakota versus Wayfair ruling. I'm sure a lot of you have heard about this in the news lately. Hopefully what you'll get from today is a little interpretation of what we believe this will mean for your business so you can take the right action. Before I pass it over to our speaker, though, I'll do a couple housekeeping announcements. First thing, we will be doing Q&A. So as a couple of you popped in your responses to our sound check earlier, make sure you've got easy access to that Q&A panel. We'll be doing a live Q&A session at the end where I'll ask those questions live of Mike right on the air. Second thing is we're also doing a poll. The purpose of that is just to keep the presentation interactive. It's 3 quick questions asking a little bit about your tax, some tax questions about your business. So please do keep an eye out for that and engage in that poll when you see it. So with that, I will pass it over to Michael Foster. Michael Foster is Partner Development Manager here at Avalara, and he's going to be today's speaker. Take it away, Mike.
Thank you, Lizzie, and thank you, team from Freestyle. Really appreciate it. I want to thank all the customers and everyone who's attended us today. Thank you for joining. I think we're going to have a good time. We're going to have a good opportunity to speak about today the impact of the South Dakota versus Wayfair ruling. Just to note, though, everything we'll discuss today definitely is our perspective on it from Avalara, but I can't say enough. You cannot substitute for professional legal tax advice. You should consult with your tax advisor for more detailed answers on a lot of the information today, but we'll do our best to give you the clear, precise perspective as we see it here at Avalara. I personally have been with Avalara for 7 years, working on both the existing side as well as the business development side, and been working with Freestyle over the last year to really kind of make sure that Avalara and Freestyle are offering you a great solution and working towards moving forward with building you an integration. So what are we going to touch bases on today? Well, we're going to look at takeaways from South Dakota versus Wayfair ruling. We'll look at it from a high perspective, talk about the impact of it, what it means for Freestyle and Freestyle customers. We'll also discuss tax compliant. Why is it important? This is brand new, I know, for many of you. Maybe you've been collecting in 1 state, 2 states right now, and so all of a sudden you've got additional responsibilities and things that are going to come at you. And I'm sure there's a lot of questions out there. And why should I have to do this? And why should I have to do this now? So I want to make sure we discuss that. I'm going to do a quick demonstration of our Avalara API service, high level, just to kind of give you an idea of what that looks like. And then we'll talk about tips and strategies for moving forward. What do I do now? And we'll finish it up with a Q&A. So I mentioned that the ruling added, I mentioned the South Dakota versus Wayfair court case. So let's just talk about that. So what was all the buzz about? Essentially, on March 6, 2017, the South Dakota 6th Jurisdictional Court ruled that the state's economic nexus legislation was unconstitutional. But on September 13th that same year, the Supreme Court struck down the legislation. The U.S. Supreme Court did agree to take up the case in January 2018. The ruling on June 21st, 2018 was in favor of South Dakota and overturned the longstanding physical presence nexus rule from 1992's Quill Corp versus North Dakota. Great. What does it all mean? It essentially means that South Dakota now has the authority to impose sales tax obligations on out-of-state transactions. What is this out-of-state transactions and what is all this economic nexus? Well, this economic nexus is essentially, it's a tax collection obligation imposed on sellers based on their level of economic activity within the state. Unlike your physical presence, it is based entirely on sales revenue, transaction volume, or both. Like most sales tax laws, economic nexus criteria vary by state, all aim at leveling the playing field between non-collecting out-of-state sellers and brick-and-mortar businesses. The ruling simply adds the economic nexus to the existing list of nexus creating activities. Nexus is still going to be enforced when companies have substantial physical presence in another state, but South Dakota has simply broadened it. It does not change what is tax exempt. It's going to still apply to service providers, not just tangible personal property, and will apply to manufacturers and wholesalers who sell direct to customers. And that's really important, because I know there are manufacturers who still think, oh, well, it doesn't impact me. This is an e-commerce ruling. No, this is an every business ruling. This will impact everyone. Like I said, who's affected? Remote sellers not currently registered with the state who meet threshold requirements. Annual sales in excess of $100,000 or 200 transactions into South Dakota. And that's just referring, and in this slide you see it says South Dakota because it's referring to just the South Dakota ruling. As we do know, there have been other states that have been impacted, and their dates of when it's going to begin has also impacted. The states are coming in as quickly as you can imagine. I think this actual slide has been updated about 3 times since the actual ruling. States enforcing the economic nexus, Hawaii, Kentucky, and Vermont, July 1st. In October or September 1st, we've got Mississippi. October 1st, there's a good number of states that are going to be putting in economic nexus. And so you all really need to be conscious of these dates, because there's not a flexibility. If you have those 200 or if you meet the nexus requirements, the economic nexus requirements for those particular states, you need to begin collecting tax on that date. So let's talk about tax compliance. Why do we got to do this? Well, what's going on with this? So when it comes to the tax compliance, it's definitely got its challenges. We're looking at your complexity just growing rapidly. It comes from the fact that you're adding new states. You're adding all of these different product taxabilities. You haven't had to deal with some of the states, maybe just your home state and the Amazon marketplace or whatever other marketplace or however you're selling. But the chances are your complexity has been pretty simple up until this happened. I will tell you this, nexus, both economic and physical, can be difficult to understand. The rules change constantly. And the compliance cost, your compliance cost is going to increase. Different states have different tax rules regarding to the economic nexus and notice reporting provisions, and those rules are going to constantly be changing. And now, instead of managing just that one portion, you now have to manage multiple states. Maybe you just have 2 states right now, but you're looking at your economic nexus impact. If it's 10, 15, 20, 30 states, you have to manage all of that, because this is not an option. The burden of proof is on you at any time to show you're tax compliant to whatever state or authority is asking in your records to prove that you're compliant. The overall prognosis has always been for businesses and the e-commerce, smaller businesses possibly, that and possibly you've never been audited, you've never been looked at. But I will tell you that has changed. The states have basically prepared and strategized themselves to target these businesses in the economic nexus field. They realize that most of your businesses don't have financial teams, don't have the resources around to manage this new complexities of tax. And so they're going to be targeting you all. And once you get one state in, you'll repeatedly be audited and targeted by those states. This could lead you to having back taxes, penalties, and interest. So when you look at the fact of you're trying to look at it and say, okay, what's the overall cost for me to collect tax, and what's this compliance going to cost for me? I will tell you, the cost to stay compliant is insignificant to the back taxes, penalties, and interest that you could incur by not being correctly taxing an item. So why now? Why are the states doing this now? They've threatened to do it for years, but why are they all of a sudden now looking into doing this? Well, the reality is the vast majority of states in the U.S. are at a total budget deficit of almost $55 billion. Potential tax and budget cuts by the federal government may only exacerbate the problem, right? They're cutting funds to the states. They're trying to pay for other things. So the states are getting shortcomings from every direction. 46 state evaluation of state income and sales tax revenues found that the states are lowering their sales tax revenue forecast for 2017 and 2018. The reality of it is there's $13 billion in uncollected sales tax revenue from e-commerce in 2017. And the states really want to have their money. And so this is why we're seeing the economic nexus laws, the marketplace fairness laws, use tax reporting laws come into play. In the meantime, what does this do for you? Well, it's just going to, like I said, it's going to trigger all of these rapid growth tax challenges that you have to deal with. They realize you have to deal with it, but their perspective, and I'll say their perspective, and it's very important. You'll hear me say on a regular basis during this presentation, the state's perspective. You have to learn to put on the state's hat to understand how they're looking at things. Their concern is not how you see it, it's how they're going to see things, and that's going to determine how they ultimately determine your compliance moving forward. You know, the fact that you have to add these new geographies or products that has product taxability, you know, the mergers, acquisitions, different things that have happened in your business will trigger sales tax challenges. And so you have to understand not just from the one state you're in, but how it's going to apply in all the states that are deemed you to have economic or physical nexus in those states. So let's take a look at, let's take a minute and talk about Avalara and how Freestyle works with Avalara and what ultimately Avalara will look like. Now, right now I know currently Freestyle and Avalara have a solution for M.O.M that involves implementing the a sales tax table into their solution. Ultimately, what we're working to do, and we're hoping this is going to happen possibly Q4, and I'll let the Freestyle team kind of discuss that later on and speak on that. But we're hoping that in Q4 of this year, we can present a certified connector to our Avalara service. Well, what does a connector do? Well, here you have what our Avalara sales tax suite does. It's an end-to-end sales tax compliance tool. And ultimately, what we're looking at is in here is going to be your Freestyle connector. It'll connect you to our AvaTax cloud engine, where we're going to do rooftop location versus a zip code base to really bring you an accurate tax calculation. We pass transaction information from your orders and your ERP system back to AvaTax, where we then provide you with the tax. At the same time, we're researching the tax rates, the boundaries, and the rules that are presented by the government. We also have a portion of that that does the exemption management. This is for exempt sales. Maybe right now you're thinking, well, you know, I don't really have exempt customers. And that may be true, but this could come into play. The document management from this could come into play, whereas you have one state right now, when you equal 10, 15, 20 states, and all of a sudden you have to collect from businesses who before didn't need to provide you with it because you didn't have nexus in a state. Now you have to start collecting documentation from people that possibly you're doing business with who are raising their hand and saying, we're exempt from sales tax. This is a easy, low-lying fruit that we see many auditors walk in and ask for immediately because they know businesses typically do a poor job of managing their exemption certificates. So we've calculated tax, we've helped you with the exemption portion of it, and then there's the filing and the remittance. Again, right now, you may be looking at this and saying, well, we've got two states. One state, I can do the remittance on my own. Why would I ever outsource this? When you reach a level of 25 or of 5, 10, 15, 20 states, the amount of time and energy you put into having to research filing rules and build the forms, put the forms together, go online and submit those versus outsourcing that and having an outsourced solution that essentially makes an electronic payment to the state on the same time of the month, every month, in large dollar figures, really does begin to make sense. So let's look at Avalara from the API solution and what we do on the back end. This is our
Hey, Mike.
Avalara admin. Yes, ma'am.
Yeah, let's actually do the first poll question. I think this would be a great time for it.
I think that's great. Absolutely.
All right. Everybody should see a quick poll. Go ahead and pop in your answer real quick before we do the demo, since we just covered returns. Go ahead and share with us about how much time your company spends on sales tax returns each month. Mike, we'll give everybody about 10 more seconds.
Perfect.
Three, two, one. Great, perfect. All right, demo time.
Yeah, and thanks everybody for submitting their replies on the demo. This is great feedback for us to understand, both from a Freestyle and an Avalara scenario, what our customers or what the customers are doing on a day-by-day basis. So thank you again for filling that out. Let's jump into the demo. Again, we're going to look at the Avalara admin console. If you remember, when I showed it to you before, we have the Avalara cloud solution here. Your system is here. In between those is an API call that is simply making a call to the cloud, where Freestyle will have an API connection. Again, this area is your admin console, and it's almost, think of it as set it and forget it. So after you become an Avalara customer, you typically connect in an e-commerce platform. You simply will just add in your account information that you'll get in the settings form here. And you'll be able to go in and connect to your Freestyle solution. Once that's connected, it's pretty simple on how Avalara works. When an order is placed on a website or is inputted into your ERP system, or what simply happens is, first thing we're going to do is verify the address. We're going to get a rooftop location. The next thing we're going to do is look at where that product is going based on that address and sourcing on that. Is it origin, destination, or hybrid version of both of those? The next thing we're going to do is actually look at the product that you're selling. Is there any special product taxability that needs to be taken into play when it comes to what you're selling? If you're selling clothing, is that marked as apparel? And do we need to mark a special, right now in school time? So we're seeing a lot of tax-free holiday weekends. I just came from Maryland. They had theirs just this previous weekend. So we're going to look at all those different factors. We're then going to look for an exemption on the customer. Is that customer actually exempt? We're going to log that transaction, and then we're going to bring back the tax. This all happens in about a third of a second. So your customers don't see any kind of change in their experience on your website or when an order is entered through your ERP. And ultimately, it doesn't affect your internal business processes. The reality of it is we're making the same calling your system that you're currently making. The only difference is that instead of calling to, when it reaches the tax portion, instead of looking at a table, it makes that API call out to the web and brings back the tax information. So setting this up is pretty simple and easy. And I'll move quickly, but I know you all will possibly have additional questions, but I just really want to show you this from a high level. You tell us where you collect tax at. Great. Where do you currently have Nexus at? Now, for many of you, figuring out, hey, where am I going to have economic Nexus? How do I determine that, right? We don't know the answers, but you can start out pretty simply. As you see here, this is a list of states that have already been added, but if I wanted to add an additional state like Connecticut, just click here, add the state. Now when an order comes through for the state of Connecticut, which has been added, it essentially says, hey, yeah, tax that item. Now that we've told the system where to collect tax, the next thing we want to look at is what is it that we sell? Avalara actually has within our system the ability, and this is under the transaction tab, as you saw me move across here. One of the things you will notice is that Avalara will keep, as you see here, a record of the transactions. And when you go into those records, you can see a breakdown of how an item was taxed, when that order was placed, everything you need to know. This is very important in how we build the numbers for our reporting that I'll show you here on the other side of things. But as you can see, you're going to get the county, the state, the special taxing jurisdictions. Now, how do we know all this? It comes from this special tax code here. Avalara maps your SKUs to the Avalara tax code that matches what it is you're selling. Now, the great thing to remember here is that if there is no tax code associated with your SKU, we simply tax it as tangible personal property, general goods. But you're saying, well, I'm not sure if my products even have any kind of special taxability. With 25,000 current Avalara customers, we've built quite a bit of Avalara tax codes in our system. We work with your team to kind of look at what it is that you're selling to determine and give you recommendations on, hey, you may be seeing that you have special taxability on items that you're selling. If you're in the medical field, if you're shipping and freight, clothing, food and beverage, agriculture, all of these topics, books, they typically will have items that are special taxability. And I'll show you this example of just gloves. As you can see here, there's over 1,000 different codes for gloves, and it depends on how those gloves are ultimately being used that will determine what the results are for those gloves and how they should be taxed. You don't have to get granular right from the beginning, but I wanted to show you that, yes, we do have that ability. What if you have a lot of SKUs? Well, it's pretty simple. Our system does give you the ability to bring in those SKUs in bulk through our import items template. You can also add them one by one. If you are in one of these special categories, or or if you're shipping a lot and doing these things, chances are you've already grouped the items, and we just translate those groupings over to our Avalara tax codes. Very simple process. It's not really complicated. And with 25,000 customers, we've done it for people who've had 10,000 items to 10. So it's definitely not a big roadblock, and you can move through it really quickly. So now that you've told us what you sell, we go back and set the locations in, and from there, you're calculating tax. And like I said, when you look at these orders, you can see all that information transmitted in. You see that the document's been committed. You're able to see what item you sold, what was the taxability of that item, how that tax was broken down, and where it goes to. Now, from a return standpoint, same thing. It's really simple to set up. We don't want you to spend a lot of time. And when we look at this, yes, these taxes are a big, big problem, right? We look at it, it's a massive thing. We don't really understand all the answers, questions, and answers to it. So how can the solution be so simple? The reality of it is, it really does come down to the automation portion of it, handing it over and saying, okay, well, these guys know what they're doing, the resources they have, and the people in place. We've done this before. We basically say, this is our solution to your problem, and you can set it up and get going pretty quickly. As far as setting up your returns, essentially, you're just going to tell us what files you're going to be filing, the frequency. You give us some basic tax information, user account information, select your form, and voila, you're off and running. We actually make the payments via an ACH account that you dedicate to Avalara tax returns. We draw the funds, we draw your complete liability, and then we disperse it to the states and the local jurisdictions. Again, there's a benefit to this. The states would rather have that lump sum money deposited in their account once a month rather than chasing down a lot of smaller checks and having to pay somebody to process them. So, which one is more likely to get audited just from a logical standpoint? The one that's the Avalara customer who, in conjunction with 25,000 other customers, has their tax liability remitted once a month, which we did billions in remittance last year, or the company that's still physically sending in a check once a month for a couple $100 or $1,000. Something to consider.
Mike, this is probably a great time to launch our second poll question.
Go for it.
Great. You should see that on your screen now. Give us an idea. How many states do you collect sales and use tax in now that we've showed you all these features? All right. Looks like we've got almost everybody. 3, 2, 1.
Great.
All right.
And I think
Perfect.
that, you know, from that perspective, I think, as like I said, the returns is an area where as your economic nexus grows, because I'm pretty sure most of you have, you know, as we look at this poll, less than 5 states, right? So, but as that gets to 10 or 15 or a point where you can't manage that, you have to begin to look at what's going to be overall the resolve. Now, while you're going through that, keep in mind, again, all of the numbers are rolling up and rolling through our system. This is a list of all the reports that you can pull from Avalara. You know, you can get really down and pull a report that will tell you all the basic information that you need to know. You see here we have several tax filing reports. We even address the difficult states like New York's apparel tax, Colorado. We have particular taxes reports in here for states like California, which if any of you have done business in California and are filing taxes, you know the difficulties that can come with that. So as you can see, there's a plethora of reports that you can pull to file your own taxes and save yourself some money while in the meantime as you progress through the system. And lastly, I'll touch on the exemption portion of it. Again, pretty simple. You have the ability to mark a customer as exempt. You can have their exemption certificate in the system. You can actually view their certificates and request certificates from our basic system. And this comes with our out-of-the-box Avalara solution. And with that being said, I should note that our returns portion of this is separate from the AvaTax calc. It would be an a la carte item you would add. And the pricing is based on the number of returns that you file on a month-by-month basis. So that's a look at our Avalara tax suite. Like I said, wanted to give you a high-level overview of it and just kind of give you an idea of what it is that we're working towards with Freestyle. So now we've covered all of that. What do I do now? How do I move forward? I've got a lot of requirements. I'm not sure what to do first or how I should do things. Well, I think those are great questions. You know, let's talk about the registrations first. You know, on our Avalara.com page, we offer resources and we have a Wayfair site where we're updating regularly the list of states as well as their economic nexus requirements as they are posting them to their state pages and making that information public. You know, I would definitely take a look at that and try to determine how to go about determining if you have nexus. You know, most important thing you can do is relax. Don't panic. It's a big problem and you have to take care of it. But you know, don't panic. You've got resources in front of you. You've got Freestyle. They gave a great presentation a couple of weeks on a lot of the things that I've discussed today, and they know their stuff. So, you know, reach out, touch bases with them, find out what's going on and what direction to go. The other thing I would do, and most importantly, seek counsel on all Nexus-related requirements and laws. Contact the CPA or an attorney tax advisor. If you don't have one, we actually have a huge network of Avalara tax advisory services here. We can assist with helping you determine where your nexus is, get you ongoing monitoring to look at when you're going to have new nexus established on a monthly basis. We can help you register, and we can help you navigate the tasks related to establishing nexus, voluntary disclosures, paying of back taxes, things like that. We've also got several resources, like I said, that reference the South Dakota versus Wayfair the court case. I would seriously suggest going in and making this a favorite. It is updated daily with the states that are coming in. There's economic nexus guide, frequently asked questions. There's videos and blogs from people who are presenting on the topic on a regular basis, and it has a lot of valuable information. So I would certainly go there, and you can get there just by typing Avalara.com and looking under resources or a copy to this link. So anytime you engage, you know, from an Avalara standpoint or from from when you engage with us, you know, things you'll want to definitely understand from an Avalara standpoint when is, you know, your annual number of orders for each state, right? That's going to help us to look at the economic nexus, know the states that you're currently registered in, right? What states you need to register in if you'd like for us to register, and know your filing frequency. As you say, hey, you know, Mike, I'm interested in you all filing taxes for us. These are all things that you would like to come to the table when you reach out to both Freestyle and Avalara for that, for any kind of additional information for pricing or cost. So here's my contact information, as well as the information to reach out to Freestyle. You know, right now in our solution, we have it in place. We've got a file that is ready to be sent out, a tax file that we can send over to you for you to be able to calculate in additional states when you reach out to us. But I will also say we're going to work hard to create that API to give you the online solution as well. We think that's a better fit. So with that being said, I'll wrap it up, and I think we could go into Q&A unless we'd like to do that third poll question now, Lizzie.
You're reading my mind. All right, let's do our last poll question. All right, so does your company manage sales tax compliance in-house? This is something we like to ask on every webinar, just to make sure we have a good pulse on the market. Many people do it in-house, but a lot of people hire an outside accountant too, so this just helps us get a good industry read. All right, great. Looks like we've got most of the responses in. 3, 2, closing the poll in 3, 2, 1. All right, great. Yep, I'll actually share this one. This might be interesting to you. So yeah, it looks like a lot of you are in the same boat, right? And we see this as very common in the tax compliance world, right? I'm doing it in-house. I'm pretty sure I'm doing it right. So yep, we'll address that a little bit more in Q&A, but otherwise, we've got quite a few questions. Mike, are you ready to get in that hot seat?
All right, let's see what we got here.
All right, I'm going to pick the very, very, very best one. All right, okay, so this one's a good one. This one's from Rick. Rick asks, how do you handle multi-channel? For example, Yahoo Store, you import orders into is it M.O.M or M.O.M? Not sure. Amazon FBM sales we ship, some FBA. How does that work with Avalara?
You know, it works really well on the API side of things. You know, the fulfillment orders that you would get from, let's take Amazon fulfillment versus Amazon Marketplace. You know, the fulfillment orders, Amazon's collecting tax for some of those states and remitting it. And the marketplace orders, you're required to register, have your liability in those states, which you're probably already doing. From a collection standpoint, we simply import the orders in from those from the marketplace stores and pull things in, and you see the total tax calculation, so all the reports run well. We do that for eBay, Amazon, I think Wayfair. So most of the sites where you calculate, we have a methodology. We have an import template that will pull those orders in. So you just export and import.
Great, thanks, Mike. Hopefully that helped you, Rick. And if not, obviously feel free to reach out. We can get you some more clarification. All right, this next question is from Tom. He says, we make changes to orders all the time. Will sales tax be constantly recalculated as we make changes?
Great question. And yes, it will be. You know, and that's important because let's say you get an order in and on March the 1st, and there's a back order item, but most of the order ships out. But then the rest of the order doesn't ship out until May the 1st. And there's a change in the tax laws during that time. We certainly would calculate the change in tax on that particular order. But the great thing about our system is that you do have the ability to notate what invoice that was, and it will actually tax accordingly to the previous date because it was a part of that order. So yes, if the tax does change, we do recalculate it, we do check it, and most likely, depending on how your business impact goes, it does not impact your overall cost for us to calculate. We anticipate it.
Great. Thanks, Mike. So we're actually getting multiple questions about the thresholds themselves. I'll read one from Eric, and I'm sure this applies to a couple of your questions. So Eric's question is, what happens if you hit the nexus requirements in a certain state 3/4 of the way through the year? You hadn't collected on taxes on the 3/4 of the year because you didn't think you had hit the threshold. Would you owe back taxes on all those sales?
As far as we understand it right now, you would not owe back taxes on those sales. You would essentially need to be registered and begin collecting tax at sale 201. So the minute you hit 200 orders, you need to begin collecting tax on the 201st one. So this is why it's going to be important for you to be able to keep an eye on how many orders or $100,000, what part of that is going to be taxable. So I think more confusing than the 200 is, the 100,000. What if you're at 80,000 and all of a sudden you sell something for 30,000? Do you tax the $10,000 over that, or does that count for the sale? Those are kind of questions that are still outlying. But as far as the total number of sales goes, you get to 190. I would suggest, if you're at 190 3/4 of the year in the state of California, and you've been on fire in that area, I would definitely suggest registering. Chances are the states are going to ask you to register and submit on an annual basis. Each state will be different, but the likelihood is that they're going to ask you to file on an annual basis in that first year. And so just so that so you would only file at the end of that year, and then the following year they may ask you to file annually again. But that's going to be based on what the state wants and what their evaluation of their frequency is.
Thanks, Mike. Great. Hopefully that helped a couple of you. I saw quite a few threshold questions, so please pop in a follow-up question if that didn't help clarify it. All right, this next question is from Bob. Bob asks, will each state be flat within that state, or will they also have the power to charge varying rates within their state? For example, California has many tax rates depending on the location. And it sounds like Bob's question is related to these new economic nexus thresholds.
It's funny you say that, because right now, many of the states aren't flat. And in fact, you would see a multitude of different tax rates, different taxing jurisdictions across the nation. You're going to deal with very complex taxing scenarios that ultimately looks like, and I apologize, I'm trying to see if I have an image of, I used to have an image of the U.S. That shows how complicated the rates are. The reality of it is, it's not flat across most of our country. There's a few states where right now general goods may be showing up as flat, but in many of the places, there's cities where across the street from one building to the next in the same zip code, you have different tax rates. So as far as the complication goes, definitely it is very complex. You'll continue to see complex taxability across the entire U.S. as you do venture into particular states for their tax maps, for their taxes.
Great. Thanks, Mike. All right. This next question.
And Lizzie, before we move on, I think I think that's a great question. Because I don't think people really understand the complexities of what the taxing looks like on a map, and what they ultimately are dealing with. it can be very difficult to calculate tax. And so when you do look at the entire U.S. from a taxation standpoint, and here I did find it. I'll just share it really quickly, kind of, and I apologize if I can't blow this up any better. But this map, essentially, and I'll see if I can't get to it, but what you see here is a patchwork. All of these little colors here are different taxing jurisdictions. And my apologies for not being able to zoom on it, but when you go into looking at, Pennsylvania's flat, parts of Mississippi, Montana, but you look, all of these other ones, all these little colors, these are all taxing jurisdictions. And it gets pretty complicated when you begin to look at, what does a tax map look like from the perspective. Take a look here. So, when you think of, okay, yeah, I'm in Pennsylvania and I've only had to tax one state, this is what the complexities that you're having to deal with. 15,000 taxing jurisdictions nationwide, and trying to figure out, okay, when I ship something here to Iowa, what does that tax rate look like? And the closer I get, the more complicated it can become. These are all the tax rates and all the information that if you expand from 5 states to 13 states or 14 states, these are all the jurisdictions that you'll have to manage. Okay, next question. Sorry about that.
Right. No worries. And if they, we're getting a couple follow-up questions. If they use the Avalara platform, do they still have to manage all those jurisdictions?
Absolutely not. That's the beauty of the Avalara platform. The minute you sign up for it, what we do is we keep all of this information up to date. And that's why those Avalara tax codes come into play. If you're selling a syringe, a medical device, let's say, in Tennessee, we know that if it goes to Knoxville and the address in Knoxville, we know exactly how that item is taxed. The state, the city, any special taxing jurisdictions that apply to that tax code. We know even for just simple tangible personal property, if there's any taxes that need to be applied to it, there's no reason to have to research it anymore. And most importantly, our accuracy is guaranteed.
Great, thanks, Mike. Definitely didn't want to leave folks hanging there. You absolutely, if you use the Avalara solution, that would completely be taken off your plate. All right, so this next question is from Tom, and this is a good one. Tom, thanks for asking. I'm glad you did. A lot of people ask this. So Tom says, it seems like we should just register and collect and remit taxes in all states, just to be sure. What do you think?
I think that's a bad idea. And this is why you need to really look at a tax going to a CPA and making sure. If you don't have the requirements to register and tax in all the states, the amount of cost and time and energy it would take to manage that is really not going to make a lot of sense. Most of the time in e-commerce and most businesses that I'm speaking with right now who are dealing with this, your margins are already thin. You would really be taking a good hit towards your margin with the overall cost of collecting, remitting, and filing those taxes. So I would say from a cost perspective, doesn't make a lot of sense. It may seem like it's easier, but it's not.
Yeah, and I'll jump in here. Avalara actually offers a nexus analysis service. It's a flat rate, very reasonable price. Basically what it does is it takes a look at your business and says, okay, great. After the analysis is done, it spits out, here are the 5 states that we recommend you file and remit sales tax in. That's actually a better place to start than just blanketing the whole U.S. and registering everywhere.
Yes.
That fee will be significantly less than your registration costs across all the states. All right, so this next question is from This next question is from Evan. Evan asks, what assistance or functionality does Avalara offer to users to help us request exemption certificates from our customers?
That's a great question. We actually have a service, a full team of people here. As odd as it is, I often say we have a service called CertCapture. And odd as it is, it's full of certificate experts, a team of about 50 people. And for many companies, we offer the service of verifying, collecting, and importing and loading up, setting up with new customers, exemption certificates. And all these guys do is work in certificates every day. And I know I call them certificate experts because I don't think any of them started out to be certificate experts, but that's all they work in. And so they are able to recognize certificates. They know which certificates are needed for each particular state. We actually manage the full exemption process for several hundred, if not thousand customers, companies across the country right now. It's a very strong platform for us, and we offer a variety of options when it comes to that. And I'll also say that's something we can do for you, whether or not you're connected to the AvaTax solution.
Great. I'm sure that's super helpful for those of you who manage your own exemption certificates. All right, so we probably got time for maybe 2 more, so I'll do a last call. If you've got a really pressing question that you definitely want to ask live on the air, please pop it into the Q&A panel, and we'll try and get that asked of Mike. I think we've got about 10 in the queue, so I'll try and pick some of the good ones that should help most people. So here's a question from Bob. Will the Avalara integration be with M.O.M or with SiteLink?
As I understand it right now, that would probably it's going to be with M.O.M, but that would be a better question for the Freestyle team to be able to answer and address. So I'm going to recommend. Oh, go ahead.
Yeah, on that, I mean, we're going to have, the plan is when we connect to a third-party tax service, which is our phase 2 for the tax work that we're doing. We are planning to most likely connect it directly to Avalara on the SiteLink side, so you get real-time calculation on the SiteLink side, and then the tax calculation is then locked down and brought into the M.O.M system. And same thing, if you do an input order in M.O.M or order entry in M.O.M, we'll calculate that tax live using the Avalara service, and then that way we can get the real-time calculation during order entry as well on the M.O.M side.
Great, thanks for that. All right, so it looks like this is probably going to be our last question. This one's from Eric. And Mike, this one's probably best for you. Eric asks, if we have a unique product that you do not have a code for, how do we figure out the tax rate?
That's a great question. We actually have a couple of different ways that we can do it. If you have a unique product that we have not seen before, which is a rarity, but it still happens, there's a couple of ways to go about doing it. If you know how it should be taxed and you've been taxing in a particular way, but we don't have a code for it, we have the ability within Avalara to create a custom taxing code, custom taxing rules, so that you can tax that product a proper way as you go through your day-to-day business. If you don't know how the product or service should be taxed, we do also offer through our tax advisory service the ability to do custom tax research, where we would go and look at the product, the service, how you're selling it, and make a tax determination for you, assist you with making a tax determination on how you should tax that information. We work with the state, we talk with different organizations, and utilize our knowledge and experience here to give you a solid recommendation. But if you do know how to tax that item, and the likelihood is you've already been taxing it a particular way and at a particular rate, then we would basically assist you with building a custom tax code or rules. Very easy to do in our system, and so you would simply set that up and go forward with that. And I think that brings up a really good point too, is all of, and I'll say this honestly, you're not going to solve all of your tax problems in one day. It's going to take time. It takes time for companies with tax departments to evolve into tax compliant businesses. But you have to start and you have to begin working. Sitting back and saying, oh, I'll just wait and we'll do this when this happens, or we'll do that when that happens. That's your prerogative. But the reality of it is, the sooner you begin looking at taking the steps to become tax compliant, is the sooner that you evolve to a point where you do become tax compliant. And when you become tax compliant, you have to continue to put energy into it to remain tax compliant. So this is not just a one-time, hey, I'm going to do this and do that, and then, okay, we're all fixed. I'll purchase Avalara. Everything's solved now. As much as we want to believe that's the case, the reality of it all is that we're simply the tool. And as a tool, we make things much more efficient. It's the difference between having a chainsaw and an axe when you got to cut down a big tree. That's the benefits to Avalara. The tree still has to get cut down. It's just what tool are you going to use to do it.
Great. All right, Mike. Well, I think we'll end on that one. Looks like we answered a majority of the questions. If we didn't get to your question during the live Q&A, please go ahead and follow up with any of these contact information you see on your screen here. We've got Mike's number, his email. We've also got the Freestyle contact info up there. We are strong partners, so obviously we want to work together to make sure you have the best solutions for your business, but we can also get you in touch with, we have a wide plethora of tax experts in our world to help you with your specific questions as well. I want to just take this opportunity to thank both the Freestyle team for setting this up and also Mike for presenting today. I hope you all got a great bit of information from today's presentation. Thanks so much, guys.
Thank you, everyone, for joining. Thank you, Team Freestyle. Jim, Ian, Sean, thank you all.
Thank you. Thank you, everyone. All right, guys. Thank you. And we'll be sending this out tomorrow. Thank you. Bye.